The following is sponsored by Patriot Gold Group. October's record of market crashes makes it the most feared month on the financial calendar. We're joined now by Jack Hanney, CEO of Patriot Gold Group, to discuss the October effect. Now, Jack, October's record of market crashes, it's legendary. Do we have to prepare for the stock market to fall even further now?
We do. JP Morgan, Morgan Stanley, Deutsche Bank are all forecasting the stock market to fall about another 25%, especially with the war in Ukraine escalating, because the war between Russia and Ukraine now has escalated into a nuclear world war threat. But yes, the month of October is legendary, starting with the bank panic back in 1907. Then you had Black Monday in October of 1929, and then Black Monday of 1987. And most economists are now forecasting that we could have a similar scenario here in October of 2022.
Well, yeah, recently, Jamie Dimon of JP Morgan stated a recession is likely in 6 to 9 months. And the IMF is also warning the worst is yet to come. What can Americans do to prepare for all of this?
Well, Jamie Dimon, as a matter of fact, and over 90% of CEOs are now forecasting a recession in 2023. They're also forecasting that less than 40% of Americans are prepared for a recession due to what is called recession fatigue. Now, Ray Dalio is suggesting that the traditional 60-40 stock bond portfolio is dead, and that Americans really need to start looking into alternative asset classes and to diversify their portfolios with physical gold and silver.
Interesting. Now, Federal Reserve President Loretta Mester said that despite the significant rate increases this year, the central bank has yet to make a dent in inflation. What will that do for gold?
Well, do you remember just about a year ago, the narrative was that the inflation was transitory. Now the inflation is persistent and unacceptably high. And regardless of these repeated rate hikes, and these have been the most significant rate hikes in 40 years, it hasn't even made a dent in the inflation. As a matter of fact, the consumer price index numbers for September come out tomorrow, and the producer price index and producer price inflation numbers came out just today, and they came in at over 8%. So what we're looking at here is persistent inflation, and the reason being is because we printed $5 trillion over the past 2 years, kept interest rates at zero, and now it's really about the supply chain issues as well as productivity. So regardless of raising rates, inflation is winning in a knockout.
And there could be possible negative returns in stocks for the next 5 years. What do you suggest Americans to do?
Well, Ray Dalio was forecasting that over the next 5 years, the stock market would return either very small or poor returns. BlackRock is forecasting anemic returns over the next decade. And Stan Druckenmiller said that we have a lost decade ahead for the stock market. There are opportunities, though, in physical gold and silver with the de-dollarization by Russia and China, as well as Saudi Arabia, as well as when the U.S. dollar starts losing some of its purchasing power. The U.S. dollar right now is temporarily just the strongest of the reserve currencies. But once the dollar starts pulling back, we'll see a significant increase in the price and the value of gold and silver.
Helpful information. Thank you, Jack. To learn more, go to patriotgoldgroup.com.
Thank you for having me.
Always.